Hey everyone, welcome. That was the closing bell. So today I didn't get a chance to really watch the markets during the day, just a couple glimpses here and there. Opened up high and we talked about how normally it's about 70% of the time when we open high or low, if we gap, we have a tendency to head towards the previous day close. So we'll see if we remained with that positive bias or if that downward bias came into the markets. So we'll go over here, and it definitely looks like the downward bias came in and didn't really even head higher at all during the day. We did start moving strongly upwards, and we just basically traded down all day long, pausing at a few of these purple bars, and then ultimately breaking Friday's low and Monday's low and yesterday's low. Yesterday's low was just similar to Monday's low. So this, though, even though we broke a few lows here or we matched the Monday low, that really is just sideways trading, if you think about it. If I didn't quite touch highs for the last few days, but I did match lows for the last few days, then really all I've done is gone sideways. So let's take a look at what that looks like on a daily basis. So definitely a large red bar right here, a bigger bar than we've seen a lot recently. I guess technically same range as this bar on Monday and a similar range on Friday, but a lot of these bars we've had before had been really tiny. So we're starting to get some range back in. We're still on low volume, and so this is a lot of algorithmic trading, most likely, not a whole lot of institutions participating other than the institutions that are running the algorithms. Not human institutional trading taking place, at least not a lot of it. But what we do see is that we finally broke below that EMA 8. And so that is a sign of temporary weakness. If we don't get a bounce back up tomorrow and we get a confirmation bar, if we get another red bar that closes below today's low, especially if it closes below these last few days lows, then that is going to be confirmation that we're going to pull back and perhaps test this EMA 20 or start to fill this gap over here. We'll have to see which way it goes. The QQQ, let's see what happened there. QQQ, we got a bit of range also. The interesting thing about the QQQ, though, is that it is still, if I take these lows, my low is still above yesterday's low and still above Monday's low, where we bounced off of the EMA 20. So even though we closed below yesterday's close, we did see a high significantly above yesterday's high, and our low is above yesterday's low. So this was a confirmation bar right here. This didn't violate that confirmation. It still looks like a bounce right here. So that's interesting to see. It'll be interesting to see how the sectors perform today as well. Before we do that, I'll take a look at the Dow Jones. Dow Jones red bar as well, but again, this high is higher than this high, right? This high is 363.25. This high is 363.55. So this is the high of the week and high for a really long time. And the low is above yesterday's low. So that's not really that weak. So the most weakness that we've seen out of those three indices is in the S&P 500. Let's take a look at, let's see if this low is below. This low is 454.87, and we are at 454.71 at the close, and our low is at 454.31. So both the close and the low were below yesterday's low, below Monday's low. Our low is below Monday's low, yes. And then below Friday's low, and it's not till Thursday, 453.34, 454.31. Yeah, so it's not till Thursday where we haven't violated that Thursday low yet. So that must be on our day trading. That's this previous low we haven't violated yet. So mostly sideways trading in the S&P 500, but we are starting to see a little bit of weakness there. So we may still get that pullback, but what you might notice is that on this Keltner channels, this is what I was waiting for. We touched the +3 ATR and then we started trading sideways until we finally arrived at this +1 ATR. We're just a tiny bit above that +1 ATR. In my book, that counts. So we've chopped sideways successfully until that +1 ATR. So we could keep on chopping sideways. We could start falling down even further, but this was good enough for me in terms of relief from this +3 ATR trading. So it could definitely start moving up from here as well. Let's take a look at those. Oh, well, let's look at bonds first. Bonds continue to move upwards so that it did surpass that MA 150. It is looking very much parabolic. So chances are that we're going to hit that MA 200. It looks a lot more likely now than before that we're going to hit that MA 200. You see that we are now comfortably at or above that +3 Keltner channel. And we do know that we can stay there for a while, but bonds tend not to do that. You see, bonds just they will not travel along a +3 Keltner channel. So far, we haven't seen more than 2 days after all this scrolling. I haven't seen it more than 2 days at a +3 Keltner channel. 1, 2, yeah. So still all this time, no more than 2 days. I guess this would be 3 days, but the bonds in particular don't stay at these elevated levels for that long. So we are now officially at our +3 Keltner channel. And I don't know why those orange ones disappeared, but in any case, we're done looking at TLT. I don't have to scroll all the way back. So we are getting up here and hitting that MA 200. We're most likely going to pull back from that MA 200 if we get there. Okay. And is there anything else to look at? Let's look at VIX. Let's see what happened with VIX. Okay, VIX is up on the day, but not very much. We're still on this muted range. And so we could still definitely start moving. You can see I identified a few targets here where by January, actually, we should be able to hit some of these levels. And that would imply a pullback at some point. Just don't know if that means right now or if we trade up a little bit more before we start pulling back. Other than that, oh yeah, we wanted to look at our sectors and see what was happening in our sectors today. Okay, TMF up by far the most, so bonds up, utilities, that's interesting, because with higher prices up, so interest rates down, so relief on anything related to interest rates. So actually this does make sense. So XLU, very rate sensitive. Retail and consumer, somewhat rate sensitive. Real estate is very rate sensitive, but that's more towards the bottom. And then XLK and communications, those would be very rate sensitive also. But with rates coming down, they should look more competitive, but looks like we lost a little bit of ground in terms of the technology. Communications still middle of the road, didn't get affected nearly as much. And looks like money moving into home builders and utilities. So very interest rate sensitive sectors, and same with retail. It's kind of jumbled up though. None of our classic pairs are next to each other. I and B are sort of next to each other, but all the rest are all jumbled up. So a little bit of a pullback or longer consolidation would help solve this, but that we're looking at a very short-term basis. So if I look at a 1 month, home builders, real estate, retail, consumer. Those are making sense. I and K and Y are kind of close together, not necessarily right next to each other. So these are lining up better for sure than on a 1 day basis, but still not completely aligned. And if I do my normal main averages, U and P, yes, V, E, and F are very far away. V and RE are very far away. I and B, I don't even see B. Oh, I and B are next to each other. These indices don't count. Yeah, and so we still have some fragmentation. So we could still stand to chop sideways a little bit more, pull back a little bit more before we're ready to make that leg higher. Okay, so to summarize, basically we're still chopping sideways. We are starting to see a little bit of weakness in the S&P 500, but we're really just chopping sideways. In the Dow Jones, we're starting to move sideways. Looks like we peaked out, starting to move sideways. QQQ is a little bit weaker. Looks like, sorry, not a little bit weaker. Looks like it bounced already. So actually, that indicates maybe an earlier upward movement than the diamonds or the SPY. Let's take a look at small cap and round it out. So small cap has been outperforming and has just been sort of moving sideways the last couple of days. So we're really going to want to watch small caps. ARK Fund is doing very well. It's been on a tear. So these are the most speculative stocks of the small caps are inside the ARK Fund. So this upward movement, it almost looks like the bonds, right? It's just following its EMA up, except it didn't go parabolic. We'll see what happens when it approaches this purple line right here, which was the previous high. If it can break out from there, then we're really going to start looking for the early beginnings of the next leg of the bull market. So here we may pause out, we may pull back, but if we break out through there, then things are really going to start lighting up. We'll have the most speculative stocks, which are in the ARK Fund, starting to lead. You'll have the IWM, which is the small cap stocks, so also very speculative. Those will start to move up as well. And then you'll have it following along with it, the QQQs, which are growth stocks, which are more speculative than, for example, blue chip stocks. So if we would see that breakout as well, or at the same time, or maybe a little bit behind, then everything is starting to line up for us to move upwards. We haven't seen it yet. It just looks like the background setting is being painted for that picture to develop, but we'll just have to see if it actually comes to fruition or how long it takes to come to fruition. So right now, overall, still positive, still this short-term uptrend, this change of trend that we had from this downward movement to this upward movement. It was a lot more protracted in the more obvious to see in the SPY. This is up, and then we went through this short leg from the end of July to the end of October, and then we started that new uptrend. So as long as we can break up through here, then it'll continue, even if we pull back first and then break up. So overall, we are expecting bullishness, and our portfolio should reflect that. But this consolidation makes it a little bit tougher. Your portfolio might feel like it's going nowhere, or just chopping back and forth. Or if we see a little bit of a pullback, then that would be a great signal to get back in. And we do have early signals in the QQQ of that pullback. And we did get confirmation yesterday. So slowly starting to lean towards more positive and more bullishness, especially in the tech and communication sectors. All right. So that's it for today. I think we did a thorough job. It doesn't Can't think of anything else to look at the moment. So that'll be it for today. Enjoy the rest of your day, and I will see you tomorrow morning in the pre-market.